Good morning. I'm Dan Noone. I'm the CEO of GTWO Goldfields, which trades on the TSX venture under the symbol GTWO and on the OTC under the book name GUYGF. We're a gold exploration company in Guyana, exploring for high-grade gold mineralisation on the Oko deposit. We're up to hole 86 and continue drilling.
Dan, lovely to have you back. I think we saw you at the end of May, if I'm not mistaken. You've been drilling like crazy since. I wanted to catch up and talk about some of these high-grade intercepts that you're finding. So how are you, first of all? Let's start with the pleasantries.
Very well, actually. The summer was good to us over here. Lots of good weather. But back to work now, back downtown Toronto.
Good stuff. Okay. Well, let's talk about this because people are intrigued. Obviously, there are a few people sort of saying, well, is Guyana a good district for mining? I think we discussed that last time out. And in fact, I probably encourage people to watch the last interview, which put a link below, because we talked about business plan, strategy, teams, and some of the thinking about what you're doing and how you're approaching it. So I want to focus this interview very much on the growth story. Okay. I want to understand why, as an investor, I should be investing in this company. What are you doing to, move this story forward, given your strategy? So first of all, remind us what your strategy is.
Well, the strategy is to build a high-grade mineral resource at the Oko project, with the idea that we'll take it to a resource level and possibly PEA, but then get taken out by hopefully a major, or if it's not that size, a mid-tier mining company, but somebody else. So our job as explorers, and our job is to show how big this can be as quickly as possible for as little money as possible and as little dilution as possible.
Right. So
that's our mantra.
That's going to excite an end buyer because you're doing the hard work for them, but it doesn't seem to be exciting the market. You're kind of moving sideways at the moment. I mean, do you think that people aren't interested, or are you putting that down to the pressure on precious metal prices?
I think there's pressure on precious metal prices, but also I think our goal with this last drilling program and moving forward is to show to the market that this will be a mine. So there's one thing to have a discovery and you get a bit of a bump when you make the discovery. But when you take it to the stage where people say, that's going to be a mine, that's the next leg up. And that's been the goal of what we've been doing over the last 5 months, and certainly the goal of what we'll be doing between now and Christmas.
Okay, so you're doing this, operating this on a very tight budget. I mean, so how many drill bits have we got going?
We've got one going currently, but we are adding another one within the next week or two.
Right, okay. So what are you going to be able to do with that? Because obviously we've seen a few nice headlines out here, but is it enough? Do you need to be raising more money and doing more of this, get to the finishing line quicker?
Well, at the start of this program, we came back after Christmas and said, okay, we now have a model of our mineralisation that's striking northeast, says high-grade shoots plunging to the southeast. Let's go test that model. So we've gone and tested that, and hence a lot of high-grade mineralisation. We also found out that we didn't just have one shear. We've now got 5 for sure, and possibly a 6th. So that came about. So now we're very comfortable with how this mineralisation occurred, where it is, and that it's open in all directions. So now I say, okay, we can get one rig consistently stepping out slowly, infilling to a point where we can get a resource comfortably all the time, right? And a second rig we can use to start testing further out, further down dip, and then 3 or 4 adjacent targets within 500 metres, which we've developed over the last 6 months via mapping and soil sampling. So we now can say, right, we've got solid work for 2 rigs, and we know what we can do with that.
It's kind of interesting. The conversations we're having with a lot of CEOs at the moment, certainly within the precious metal space, is that there's not a lot of money around for a variety of projects. You've got to be cognizant of that, not just what you're technically doing on the ground, but what the market's telling you. And are you deliberately slowing down, or are you saying where you'd always got this plan to work at this scheduled rate? Are you waiting for something to change in the new year? I mean, what was the thinking?
Well, I think after last year's drilling, we knew we had this system where we kept hitting, but we didn't quite understand exactly how the geometry was. And so we wanted to go and test that model. Now we have it, then we can say, okay, we can comfortably keep stepping down, and it's like, quickly can we add the ounces here within the high-grade shoots and also stretch it out along strike. So we're comfortable with that. The second rig will go back to where we were last year when we had one rig. Let's just start really testing these other targets because we want to add value by generating ounces. Now, money-wise, we've got about 2.2 million in the bank. We've had about 1.5 of warrant money exercised in September. There'll be another about 0.8 of a million exercised by the end of October. They're well into money warrants. So between now and this end of this program, we'll probably spend $2 million by Christmas, and we'll still have another $1 million by the end of the year. So at that stage, when we come back next year, it will either have to raise money or we'll slow down. But currently, we're drilling as fast as we can that we feel is appropriate, with sensible targeted drilling, which adds value.
Okay, so how are you focusing on the drill bits? You're drilling. You seem to be hitting, which is good news. So how many targets do you have? How successful have you been? And this drilling is to what end? Just to get nearer the point where you make a decision on putting out a resource, or what? What's the so what moment for me as an investor?
Okay, so basically we'd like to think that we could, this program we're commencing with the second rig here will get us to the stage where we have enough drilling to be able to put out an initial resource by the end of the year. Now, whether we have the assays from that drilling by the end of the year is the second question, but basically this program should get us there. So by the end of this year, early next year, we should have an initial resource out. We don't think we'll have stepped off the mineralisation, but we want to put a resource out which focuses on the high-grade mineralisation and the size of mineralisation that we have, and that it's still open and can get bigger. But to give everyone a base level of what this is, we will be targeting really the high grade in the resource. We're not going to go scavenging ounces just for the sake of it, because at the end of the day, the real value here is such a high grade resource. Whether someone mines the low grade later, that can be someone else's decision. But here we've got a very high grade resource, and we're targeting drilling that. We seem to understand now what's controlling that, and we think by the end of this program at Christmas, we should have enough to be able to put together a solid resource, which is high grade and then shows the potential for this deposit.
So, it's interesting that you're kind of focusing just on the high grade component and sort of leaving a lot on the table, i.e. these lower grade ounces, because there's an orogenic component to this, isn't there?
Yes. But at the end of the day, when you look at all the great mining districts, and people can talk about Kalgoorlie or they can talk about Malarkey, big open pits, low grade, they were all high grade mines when they started. So, that's what makes all the money at the start. And that's basically what we have. We have an undrilled district, which we were the first guys to drill. And so you've got all that high grade there at surface. So that is definitely the target. And that's what's going to make all the money for whoever mines this in the early years. Okay,
so last time you had about 73 drill holes done. I think you're up around 89, 90, something like that.
86 now.
86, okay. What more do you know about the structure of the ore body? What, in terms of what you're seeing? You talk about, what do you know?
Well, basically what we know now is that over about 900 metres of the main zone to date, we have shear zones with quartz veining striking north-south. And they repeat. There's 5 repeats of the shear and possibly a 6th. Within those long linear panels, we have high-grade shoots which are developing, plunging steeply to the southeast. And that's because you've basically folded that plane from north to south. So you've got fold closures where it thickens, fold limbs where it thins. So in the thickest true width we have to date, it's like 9 metres going 11 grams. Then on the thin, it gets down to about 1.5, 2 metres, which would be a minimal mining width. So basically that varies as you go along these planes. And now we have, especially that's plane 3, plane 4 and 5 are the same, but we've only drilled them out about half the length today. So we've been doing 80 metre step outs on the shear 5 was the target. So basically this is shear 3 with the most pier points, I think you can see, Matthew. So basically what we see is this panel which runs northeast. The mineralisation has a slight dip of about 20 degrees to the northeast, and that is controlled by the actual plane of the F1 folding. And then the second folding, where this plane's been folded, concertinaed, we develop high-grade shoots coming down to the southeast. And we'll see a periodicity of this as we march to the northeast until we get to the big fold closure. So we see that in shear 3, shear 4 and shear 5 are all high-grade. Shear 2 and shear 1 tend to be lower grade. So we're focusing on 3 and 4 and 5, and now we've hit a shear 6. We'll get and target that by drilling through shear 5 to shear 6. So sort of the beauty of shear 5 was we drill through shear 3 and 4 to get there. And now we're really just stepping back across and drilling 5, and we'll pop into 6 as well.
Okay.
drill higher up in Shear 5.
Yeah, so I'd seen that diagram in the PowerPoint. It's sort of interesting. I guess that then comes back to what do you? I get the okay. Well, let's put out a maiden resource or some indication or initial resource, and then maybe do a PEA. But what do you think you're going to need to demonstrate to any potential buyer here? Because high grade is one thing. Amount of contained metal, like the scale of this asset, and give some indication of economics is another. So, won't you get more money by taking this through to a PEA rather than just a resource? And from what you're seeing, are you more likely to do that?
I think the value add here is to grow the resource as much as possible before you put a PEA around it, because the numbers are meaningless if you're still expanding the mineralisation. And at the end of the day, the guys at the big companies will sit there and say, just show us how much mineral you've got and show us really with the core and whatever else, and they'll do their own numbers. They don't need me to tell them how to build a mine. So my job here is to understand the geology, keep building out the high grade, along strike, down plunge, and parallel zones. And we are seeing to the south of us, to the northwest, and to the east of us, we've hit high-grade mineralisation in our prospecting in the close range to the high grade that we have at Oko. So that's what we'll be targeting also with this second rig. It's these satellite zones where we're seeing the same kind of geology with the same kind of grade, just cropping out in the creeks. We'll expand that out and see how that goes. But that's another main Oko zone would double the potential straight away.
So why are you rushing towards a resource estimate by the end of this year then, if you're seeing this thing building out and the grades are continue to be good? You're in no rush, and who wants to put information up at the end of the year? I mean, most people are selling.
Yeah, that's that is the discussion we had last time, and we had this discussion internally all the time and with the analysts. And people want to say, they want to know that they say they can't get the fund managers in until the fund manager sees, or they can tell the fund manager that's going to be a mine. So we can put up our long sections, we can do all this, but we need to get. Nothing wrong with the retail. We like the retail investors and they hold our stock there. But if you want to get the fund managers coming in and buying lots of stock, they have to know that this is going to be a mine. They don't have to know how big it's going to be, but they know that they can look at it and some analyst will tell them this will be a mine. And so I think to help that, we need to put out an initial resource with the caveat that this is just a start. We're not doing this to show the final size, but just saying this is the minimum of what we have. Have you
been? Yeah, it is. Because timing's everything, and the variables change, right? So I'm just wondering that are you so fixed? And I know you've done it before, so it's you know what you're doing, but do you ever look at this project and see some of these numbers come back and go, do you know what, this is going to be better than we imagined when we started? We could definitely extract a lot more value if we can move this thing along. Maybe we just build a team to be able to do that. Why are we rushing to selling this thing? I know it worked before, but do we need to now?
I don't think it's a rush to sell something, but it's certainly a rush to reduce our cost of capital. Because as you say, as it gets bigger and we have to drill more, then we have to have the institutions in behind it and the analysts saying, yes, this is a good thing, because that will raise your share price and reduce your dilution. So, it's definitely, we need to get away from just the discovery premium. You look at our competitors in Guyana, there's 4 or 5 of them who have market caps of 30 to 40 million. They're on old mining districts or whatever else, haven't drilled a whole discovery hole yet, but they're around that number. We jumped out of that with our discovery. We're around 60, 65 million, but that's really a discovery premium. It hasn't given us a premium for something that's going to be a mine yet. So we need to express that to the market and then have the funds come in and buy our stock and push the price up so our cost of capital goes down. So that's the theory anyway.
So are you still confident? We talked last time. The other thing we talked about last time was obviously, how many ounces in this resource. You've got to put a number on it. You said it's multiple millions, not single. Are you getting a better sense of, I know assays are late, etc., but you're getting a better sense of the scale of what you're going to be able to put out with the resource? I'm
still comfortable with it's a multi-million ounce district, and certainly with some of the stuff we're seeing to the south of us, with some of the results coming out there, which is contiguous with us, you start to see this system extend not just out 2.5 Ks at Oko, but basically another 2.5 to 3 Ks to the south. So the district itself is quite prolific, I think. It's never had a drill hole until we started in 2019. And I think most of the majors, and you see Bristow gave his presentation at SCG last week and with his map of where you find world-class deposits, and Guyana is one of those. Basically, it's interest. This district's going to attract a lot of interest because it's not just us now. There's other companies making discoveries there as well. So I think ourselves, yes, I think we're still in that multi-million ounce target range at Oko. Along our trend to the northwest completely, I think we'll find a lot more. And to the south of us, obviously, there'll be probably a decent discovery as well. So I think the district itself is starting to show how prolific it's going to be.
So do you think the market, the way it is at the moment in terms of, most gold, precious metals generally have been moving down, sliding down, actually surprisingly so some battery metal companies too. Do you think that's going to make the decision for you as to whether you just take it to resource estimate stage or through to PEA? Because if you get to January, you're sitting with $1 million, you got a choice to make: either go and raise more money and dilute your shareholders, of which you are major shareholders yourselves, or just hunker down, stop drill 1, stop drill 2, and wait until the market does something, because at the moment it's not giving back.
Well, that's the $1 million question. That's $1 million
Literally,
question.
in your case.
It's something we have to be cognizant of. Certainly, like I said, between now and Christmas, we will keep drilling to expand the resource and attempt to make discoveries on the outcrop of mineralisation around us. That'll be the discussion to be had at the end of the year. We'll see how the market is. We don't control that, and we'll see where we go. I mean, hopefully the market does come back for gold. Certainly, the price of gold is there. There's no problem there. It's a source of money for exploration is the question. And we'll see how the market goes. The windows tend to open and close even during boom cycles. So we know where we need to get to and what we need to do. And so if the window does open and there is excitement again about gold, we'll know what we have to raise to get to the next stage. So, and that'll be well planned. We don't just randomly run on. So the next decision point will be around Christmas about where do we take this.
Yeah, I mean, look, I've never got the impression with you that you're one of those companies that promotes numbers in the hopes to play the market. I think you're genuinely concerned about building a project which someone will be able to mine at some point. So I've never felt that, but at the same time, I'm also intrigued by your thinking about, you're cognizant about what's happening in the market and you will react accordingly. I know you're going to spend a couple of $1 million between now and Christmas. That's great. Some more data. But if those headlines, if those announcements don't move the market, because the market's just not going to move for anyone, it's a really important decision. It's a really important period for you in terms of not just do we take it to resource estimate stage only and then try and flog it, or can we take it to PEA, but how you maximize the value of your company for that potential sale at whichever point you decide to sell that, right? So you've got to, because again, it's like some companies are, they always speak to lots of geologists and they're like, oh, we've got to get this stuff in the ground, right? We've got to get stuff, and they forget about the value creation bit. So, what are the options available to you?
Well, I think, as we go through the cycles in general, we always go when the market's hot, raising capital is the easiest thing because the prices are high and people want to put money in. Then we go through phases where, the markets are closed, but mining companies are making lots of money and they want to invest, which is always a second choice because they get a foothold. Or you can vend it to somebody and take their shares and basically allow someone else to develop it and ride up with them. I mean, it's where the capital is in the market during the cycle. I mean, we all like it best when everybody loves gold stocks and the prices are high, but that's not always the case, right? And so, and also, as you say, then sometimes you have to say, we're going to slow down here. We're basically going to advance slowly, do the low-cost exploration around the mine or around the deposit, and wait for a window to open or wait for a transaction to occur with a major company or with somebody else, which adds value to our shareholders. So, like, as you say, we're big shareholders, insiders about 40%. So we're not keen to be diluted, but we also understand that you can't just sit there forever and do nothing. But there are other options besides just going to the market and raising money.
Okay, well, Dan, I appreciate the update. And you've got a bit of drilling to do between now and Christmas, a couple $1 million worth. Come back on and talk us through those. We hope you get more of the same. Some nice results recently. Obviously, the targeting's going well. Thanks for coming back.
Thank you, Matthew. And definitely we'll come back at Christmas and we should know more about the deposit and it should be a bit bigger, I'd say. Thank you.